Well, hi there. Thank you very much for joining me in my esteemed panel. We've talked about politics, and now we're going to talk about money. Today, the dollar looked set to extend its gains in financial markets, counting down to the US presidential election, which we've been all talking about. Election polls, let's not discuss that because I think we just had a tete-a-tete about that one. But proposed tariffs and tax policies on both sides are likely to keep the US interest rates high and undermine currencies of trading partners. So we're going to look at the prognosis of the dollar in the next 5, 10, 20, and beyond years. I think we've introduced our panel, but I'm just going to reintroduce them. On the end, I have Maurice Gravier, Chief Investment Officer at banking group Emirates NDB. Beside me, I have Matt Khalid, CIO of Phoenix Holdings. And to my left, or your right, I have Christopher Smart, founder of geopolitical risk and investment strategy practice, the Arbroath Group. So, Christopher, I'm going to start with you. What has the dollar got going for it? We have a known and trusted legal system, common law, independent regulators. Take it away.
Well, thank you for the invitation to be here. Thank you for including me in this panel, because this is an issue that I've actually tried to track a long time as an investor and government official, and then now in my current role advising investors and corporate leaders on geopolitical risk. The dollar and the fate of the dollar as a global reserve currency is obviously at the center of most of these questions. And I think, it's very easy to see the flaws in the dollar because it's very easy to see the flaws in America. And I always look at currencies as backed by the business model of the country that stands behind them. And in this case, in the United States, we still, for all of our flaws, have the economy that creates again and again the biggest and most innovative and most influential and impactful companies in the world, whether it's Xerox or General Electric or Microsoft or NVIDIA. We still have the research universities, the national laboratories, the entrepreneurial ecosystems that create those new ideas that become those companies. And we still have the rule of law, the independent regulators, and the institutions that kind of give you the sense that that business model is going to continue for a while. Now, in most businesses, you also have a marketing department that helps promote that business model so that investors will continue to buy it. Our marketing department, in fact, does everything possible to get people to ask questions about whether the dollar is a reliable store of value, or whether we are committed to balancing our budget, or whether our debt will come under control or not. And you would think that if we were actually trying to get people to stop buying the dollar, we would actually do exactly what we've been doing for the last 30, 40 years. But I guess I would say that, you have to look at this as a long-term proposition and believe in, measure, just like any other investment, the United States of America, Inc., or LLP, versus any of the other alternatives that are rising or not, as we've just heard from the previous panel. And I would just say, the ultimate test, and I'll end with this, is I would encourage you to get up in the morning tomorrow and look in the mirror, and if somebody says to you, you have to put all of your money in one currency and you can't touch it for the next 25 years, tell me what it's going to be.
Now, you and I talked on the call about this IMF's currency composition of foreign exchange reserves report that we saw in June. We've seen a decline in the dollar share of allocated foreign reserves of central banks and governments. That's sort of a trending decline. What do you think about that?
Well, it's trended for I think the last 20 years, it's gone from roughly 70% of reserves to roughly 60% of reserves. I think that's natural with the slight opening up of the Chinese economy. I mean, the Chinese economy has grown a lot. It hasn't necessarily opened. It's still not a convertible currency. And it's natural that as other countries grow and the U.S. share of global GDP declines, that other countries would emerge. But again, I think you sort of have to look at that as something that was lower in the 1980s and 90s and rose up again, and now is on a slight downward trend. But again, that doesn't fundamentally change I think the arguments behind what makes the dollar attractive to a lot of investors right now.
And we've seen the money going to non-traditional reserve currencies. That's the Aussie dollar, Canadian dollar, Chinese renminbi, South Korean won, Singaporean dollar, and the Nordics. Matt, Khalid, can you tell us about this, why you think that this is going?
Well, I don't know. For me, I guess sort of a currency is really a measure of value. And the only measure of value that has stayed constant for centuries, right? For millennia, I should say, really has been gold. So if we can if we can, let's say, project, I remember you asking me about the 100-year thing. And I said, good God, 100 years from now, the only way of looking ahead is maybe looking back. Where were we in 1924, right? Warren Harding is president, and in the UK, what would it be? I suppose Lloyd George and Bonar and the first post-war. I would say it would probably be $50,000 on gold because, take $2,000 as a base, and we were only at $2,000 sometime late 2022, early 2023. We are now at 2731, just as we came in, 2731 an ounce. So you're talking about, is gold trying to tell us something? I mean, the dollar peaked in September 2022, the dollar index, which of course is really the euro in drag because 57% is the euro. We are now at 103.46. The 200-day moving average is 103.80. I feel we make it. So to me, it feels that if we are looking at the dollar in that context, we really should be a little wider. Now, none of these currencies have really a realistic hope of becoming a reserve currency. Because if you think about it, would you want France as your reserve currency? I mean, Maurice is probably better suited to answer this, but you don't have a government. You probably are not going to make the budget with So poor Barnier, Michel Barnier just did the Brexit, and are we looking for a Frexit, maybe? It's no coincidence that the old America defaulted. This is not mentioned in conventional media, but America defaulted on August 15, 1971, when President Nixon pretty much broke the Bretton Woods promise, right? That the dollar is convertible to gold at $35 an ounce. And again, there was a French connection there. Not in the heroin sense, Maurice, but in the sense of Charles de Gaulle. He said, if it's either your word or if the dollar is as good as gold, we'd rather have the gold. And that depleted the American gold reserves at Fort Knox and forced the end of Bretton Woods. Now, the world basically was given pieces of paper which had no measure of value, and in essence, the world was dumb enough to take it. So look what happened to the Japanese, or to the Arabs for that matter, in terms of the purchasing power of their dollar holdings. If you take the long view, going back to when was the Federal Reserve created? 1913, I think, right? From 1913 to today, the dollar has lost 97% of its value. But then there are so many other currencies that don't exist. The Vichy franc, for instance, right? Just not picking on Maurice, just taking France as an example. They were good enough to give us nuclear technology, right? So my currency is no longer the Indian rupee, it's still the Pakistani rupee. It won't last very long, but for the time being it is. So I don't know. I don't think you can predict anything for 100 years now. In any case, I'll be cavorting with we won't get into that. With the 72 of them.
Well, Maurice, what about gold? Does this mean that trust
gold,
is moving?
I couldn't agree more with Matt. Money was invented not far from here, Mesopotamia, 5,000 years ago, and metallic money was quickly there. And even, as you rightly said, between Bretton Woods, 1944 and 1971, the dollar domination was actually gold. The dollar was a kind of a gold ETF at the end of the day. It was convertible. So the dollar domination is recent. However, I agree with Chris. There is not one alternative in fiat currencies. It was the dream of the euro, and it failed. And now in the IMF numbers, in the reserves, official FX reserves, gold is bigger than euro. And yes, dollar is marginally lower, but it's marginal. There are 12 trillion of FX reserves. Dollar is 7. euro is 2, gold is 2.2. So for me, there is not one alternative to the dollar. However, we all know that there are strings that come attached with the dollar, and there are many reasons for that. And I would add 2001 as another date, you know, this Patriot Act and some section that makes it complicated to deal with dollar for some countries with some countries, which is I guess another topic will come. But for me, there is currently no alternative, and we're talking about 5 years or something. There is not one other currency. I would love to say that Swiss franc is, but it's way too small. You cannot buy 1 trillion of Swiss franc. It's more than the balance sheet of the central bank. And yen, for Japanese people, 250% of debt to GDP, you can forget.
Yeah.
Euro failed. There's no alternative, except gold. I agree with gold.
Well, gold is a great investment, but it's not a currency.
It is.
It is a currency.
I disagree.
It is a currency.
Well,
I mean, you come to the dark alleys of the world, the shitholes, as President Trump called them, and I can assure you that gold is very much a currency. I mean, it's, try to get it.
So we have to define our
Do
terms,
not
but I
matter
think
at
in
all.
terms of operating an economy, having a unit of account,
As a store of value, as a unit of
a store of value, but it's not again, I
Not
don't think
necessarily,
it is not something that an economy can run on. What I would say is I would put in a plug for if any currency will rival the dollar, I would put in a plug for the euro. In fact, because Europe does have the institutions, it does have the independence of the regulators, it doesn't unfortunately have the inventiveness yet or the ability to create new technologies and drive the businesses of the future. But
Chris,
again,
Europe
in terms
is running
of
a welfare state that has gone bankrupt. It's basically a Ponzi scheme. I mean, look at France. I don't even think you'll be able to get this increase in the retirement age of 64. You've got, what, 10 million, 6 million people from the Maghreb there, people from a totally alien culture now being asked. I mean, you know the bidonvilles, les racailles, that's a word I learned from Sarkozy. So in a sense, I just don't see, and these are people who bring their parents with them. So you are seeing two Europes. You're seeing the Europe of the technocrats, the Europe of La Défense, or the rive gauche, the fun part of Paris. And then if you go out to Saint-Denis, it's a totally different story.
I agree. I don't think the topic is France, really. If you want, we can.
Just because, okay, we can talk America too.
But that's for sure. There is probably a link, and you can take France. Currently France has issues with these levels of debt and deficit, despite the fact that you have full employment and growth. So it's a nightmare, and it's difficult to tax more when you're already at 45%. But to the point of what makes a currency robust, because I agree with everything you said. It's backed by an economy, but it's not a stock market directly. And the issue with the currency is that when you can print as much as you want, that's not exactly the same thing as a stock market. And what do you do with the currency? If you want to invest it, the dollar is second to none. You're right. You have access to the best markets in the world in all categories. And when you want to spend it for your imports, it happens that the US dollar is used in 85% of global trade, despite the US being 25% of the global economy and maybe only 10% of global trade as a counterpart. And this is why the dollar is irreplaceable in the short term. Personally, I think that at some point we will see more non-US dollar denominated kind of peer-to-peer trade. And in this case, suddenly you say, okay, so the dollar, they can print as much as they want. It's still the best economy in the world, no doubt, but they can still print as much as they want. I have some strings attached because it's dangerous to touch the dollar. Sometime you can be you can be in trouble. You can have your reserve being frozen if you do something that the U.S. administration is against. And I'm not judging. It's a fact. And if you don't absolutely need it for your trade, maybe this weight will be lower. But I don't think it's one currency that is the opposite. And unfortunately, I don't think if there is one, it's not the euro for me.
But
I think we're going to talk. We're going to get on to weaponization of the dollar in a minute, but first, let's talk about the BRICS, because though we're 2 weeks away from a U.S. presidential election, we're 24 hours away from a large meeting in Kazan with the BRICS countries, who have suggested in the past a currency to replace the SWIFT system, a currency that would be possibly backed by gold, possibly on the blockchain.
sometimes oil.
Sometimes oil.
A lot of different theories behind what it might be.
Exactly. So what are the roadblocks for the SWIFT replacing currency that we might hear about tomorrow? And what has it got going for it?
We don't have enough time to talk about all of the roadblocks.
Oh, okay.
We've got a lot of time to talk about everything it's got going for it, which is not very much, in my opinion. The BRICS, I think, is surprising to many of us, including me, that it's actually lasted 15 summits or 16 summits tomorrow, and that there are more countries trying to join the group, including the United Arab Emirates, who the president is there right now. But I think that's more a question of countries caught between these geopolitical shifts, looking for alternatives, hedging their bets, exploring options. The dollar is not a perfect currency, as I was trying to say earlier, and people are concerned about sanctions being placed on them. But the likelihood, if we have problems between Greece and Germany sharing the same currency, think of the problems between Brazil and India sharing the same currency, let alone Russia and China. So I don't think the currency issue is a serious idea. They are talking about different payment mechanisms that would avoid sanctions, and I think that's something that's natural, but probably a problem for those of us who believe in democracy and borders and all of the things that we're fighting against in terms of Russia's invasion and maybe some of China's territorial aspirations.
Yeah, okay, so now we're on the weaponization of the US dollar. I guess you can't talk about one without talking about the other. Does the weaponization of the US dollar work?
I think it does. I think it works particularly well when it's done in coordination with allies. And so the fact that it is more or less aligned with European sanctions is very important, as well as Japanese and Australian and Korean sanctions. I think it's wrong to think of the dollar as sanctions as something that would have stopped an invasion of Russia, but it is clearly, at the very least, going to be part of a negotiation to the end of the war, and is clearly something that really bothers the Russians and has hurt them in many ways.
I don't think it works at all. I mean, if you look at, for example, what the seizure of $600 billion of Bank Russia, the Russian central bank's asset, did, was that it forced China to develop an entirely new renminbi-based system for its oil sales and its trade, right? In the past, China was just trading with a bunch of its really unspeakably evil vassals, like Kim's Korea, baby Kim's Korea, or the Myanmar, Burmese military junta. But now, Hong Kong, which is of course part of China now, but now, fully 50% of China's trade is invoiced in renminbi. You've got the Shanghai Gold Exchange, which acts as a sort of a clearinghouse. Think of the analogy being the New York Fed. So, the Kazakhstan, Pakistan, Zambia, and Chinese exports are on fire. The only reason China's GDP growth is not, just think of the balance sheet recession that they've endured, right? Since Xi Dada, or President Xi, came to power. In essence, you're seeing $100 billion a month. $100 billion a month is at least $30 billion more than the record high monthly surplus of Japan and Germany combined. So in essence, where is that money going? It's certainly not coming into US Treasuries, because if you look at the Chinese holdings of US Treasury bonds or their participation in the auctions, that's down dramatically in the last 5 years. What you are seeing, though, is these renminbi-based markets that are flourishing, admittedly more in trade. It's still a capital control currency to a very great extent. But imagine if the US had endured the kind of balance sheet recession, the fiscal black hole that China has endured. Your property market gone for a toss, having lost 2/3 of your equity market. The US would have been consumer spending would have collapsed, but that's not been the case in China. And it's only exports that have kept it alive. And exports where? BYDs. Just go to Riyadh, go to Dubai, not this Dubai, Satwa Dubai, old Dubai, go to Sharjah, go to Ajman, there are 6 other Emirates, and go to Brasilia, go to Sao Paulo, go to Mexico City, Jakarta, Manila, and you will see BYDs all over the place. It's no coincidence that China came from nowhere to become the world's biggest car market by a factor of 2, right? And Das Auto, which is Germany's car industry, is in its worst recession ever.
Maurice.
So something has changed, and it can't really buy this myth about China, evil, bad, totalitarian, America, good, democratic. I mean, if you're hit by a 2000, laser-guided bomb in Baghdad or Kabul or Libya, doesn't matter where it came from. There too, of course, France had a little hand leading from the front. But then you had Carla Bruni as your first lady, and I would excuse a country anything you had Carla Bruni as a first lady.
You know what? One of these days we'll go together to France and
No, La Belle France. Love it, love it.
Talking about the dollar and.
I just wish you, Maurice, you'd won the Battle of Agincourt. You had a chance at Blenheim, which you kind of won. I mean, Louis XIV. Then you had another chance at Waterloo, and there you blew it, Should have bribed the Duke of Wellington, Today we would all be speaking French, because that's a currency too, isn't it? The English language, right? The very fact that all of us are speaking English.
Yes.
Today is a currency by itself. So currency is really a network, and a network doesn't get replaced until an alternative network comes in, right?
One or several, and maybe I will try to go back to that.
Answer about Agincourt first.
Sorry?
Answer about the Battle of Agincourt first.
Answer about the Battle of Agincourt first.
No, I won't, sorry. I'm not into that, but so on the currencies, the BRICS plus, the plus is important because you're absolutely right. We even know, even within the core BRIC, we cannot say that India and China agree on everything, and you cannot imagine to have a common currency. And again, the Eurozone experience is not brilliant. But I think we're talking about a trade currency because if we look at the world, it's obvious that it's not the same polarization as it used to be. So for me, we have the West, let's call it the West, even if it includes Japan and Australia, which is a bit weird, but where you have aging population, to have trend growth, you need productivity. So it's about innovation. It's about, and good news, the US is great at that. So it's about disruption, this Schumpeterian creative disruption. That's how you get growth. But in the rest of the world, sorry, you're a professor of economics, so maybe you will contradict me, but in the rest of the world, we have lots of, let's say, Ricardian growth ahead. It's just optimizing the trade between countries, getting specialized. And we've seen that. We've seen this value chain transferring from China, who was factory of crap, to now factory of EVs, of green tech, of planes. You've seen this Comac 919 coming for Airbus and Boeing and all this stuff. And you have this specialization. And in these countries, I think they don't need to use the dollar, and they don't want to. So they cannot use the same currency, but a trade currency. And the idea of, frankly, a BRICS trade currency backed by gold and on the blockchain, it would work perfectly. Frankly, it would work perfectly, just for trade. And I could very well imagine that the gold would be in Abu Dhabi, in a neutral place in the middle or something. I think it would work for trade, because for the rest, I agree, you can't have the same.
Maurice, you mentioned aging populations, and this is something that we had all talked about as well. What do you think the aging population of the United States will have to do with its debt burden and also with the value of the dollar?
Oh my God. For the debt of the US, of course, it's a concern for the West, but my personal stance, and I'm very French for that, sorry, is that other dominoes will fall before the US if they have to. And frankly, I'm more concerned by the Eurozone than by France. You may argue that Japan is special. Japan is special because, yes, they crossed the 100% debt to GDP in 2000, and then 200, and now they are heading happily to 300,000%. But they do own their own debt, and their population is aging to the point that it's actually declining. So it's a bit of a closed circuit thing for Europe, I don't think, and for the US. I think we'll have other troubles before having trouble in the US when it comes to debt sustainability, even if it's genuine questions, because do you monetize it? But then we know now that inflation is not a threat of the past, and how do you do? It's not obvious, and that's why gold, for me, because for me, gold is a currency. It's just accepted everywhere. It doesn't yield anything, but it doesn't matter. And you don't measure it in, it's 20 trillion market cap, but actually, it's not market cap, it's 220,000 tons. That's what it is, and it's physical, and it's like Bitcoin, it's proof of work, it's something, it's accepted everywhere. Nobody can print it, and that's what I like with it.
I'm sort of knitting my brow because I think of something, a currency is something that you can actually exchange for goods And gold is a great, as I say, store of value and maybe a great investment or diversifier of a portfolio, but I just don't think of it as in terms of a currency. But to your point about the US debt, it is an issue. It is an issue that neither party in the United States is looking at right now. The only thing I would say is I think it's wrong to look at the US or any government as like a household that has to balance its budget, and ultimately, how are we ever going to pay down this debt is sort of a meaningless question. We're never going to pay down the debt. It's a question of making sure, again, I go back to, is your business model, is your growth model, is your innovation enough to sustain the debt? And at least so far, the US has been able to do that, and that our expected growth rate in real terms exceeds the expected expense on the debt. Now, if and when the day comes, and I think I agree with you just with what you were just saying, if the day comes right now when that is no longer true, the fact that the dollar is not the reserve currency, the fact that the debt is not sustainable, may be the least of our problems in the sense that we've got so many other things that we need to address.
But when we say debt in the United States, we also talk about the world's financial plumbing. So can you expand a little bit more about when we look at the US debt burden and also then the value of US Treasuries, what do you think the effect of a rising US debt burden has on those?
Well, ultimately, the debt is the importance of the US debt to the rest of the world's financial markets is it is the premier safe asset, the most liquid, the most reliable, the one that everybody runs to when there is a crisis. And that is what, we believe isn't going to change for a while. Now, I'm a long student of history. Nothing is forever. There will empires rise and empires decline. But I still, if I can't look out 25 years, but if I look out 5 or 10, I still think compared to the alternatives, and you've got to put your money somewhere. That's something was explained to me a long time ago when I went into the investment world and I was on the sell side, that those folks on the buy side, they've got to buy something. So they might as well buy what you're offering. But in any case, I think it is something that investors have to have a place to put their assets. And so the U.S. Treasuries right now, in terms of a liquid, safe asset, is really, I think, the best alternative right now. And just to pivot to China. China obviously is a big economy. It's growing. There's a huge amount of Chinese exports that are flooding everybody's markets. That's actually a separate problem. But I guess I would say China is not, the currency is still not convertible. It is still not a store of value in any sense right now.
But just staying on US Treasuries, we've had a few issuances that have been somewhat poorly attended. Matt, what's your thought on that?
4% of the world's population, the US, 40% of the world's public debt, 22% of the world's GDP, 22 to 24. I think, Maurice, you might want.
Actually, 25, sorry.
25,
I'm
yeah,
French,
roughly, yeah. So, okay, that's being optimistic, pourquoi pas. And 70% of the world's market cap. Now, is that sustainable for the next 10 years, 20 years? Let's talk about the debt. We have, in a sense, 800 years of financial history. If you read Rogoff and Martha Reinhardt of Harvard, they basically analyze financial crises over an 800-year period. Means we're going back way into Plantagenet, England, and to today, to the GFC, and pretty much came up with the conclusion that there's one end game to every major accumulation of debt in human history: devaluation or default. And really, a devaluation is nothing else but a stealth default. So the way I look at it right now, why would I buy long duration debt at 4%, 4.09 to be exact, as of this morning's opening in Singapore? It seems to me that the one thing nobody talks about, not even in the debate, the word deficit was not introduced. And if you look at the numbers, the CBO said that the US budget deficit was $1.8 trillion, which is 6.4% of the GDP, at a time when we are near full employment. What happens if we go into a recession? Assuming we do. I don't think the business cycle has been repealed forever, even though if you look at the bubble in the Dubai real estate market, it looks as if it is. But if the business cycle has not been repealed and we go into a recession, cyclicality almost mandates that the deficit will go up to 10 to 12 to 13%. Now, that is the message that gold is telling us. That is why gold, in a sense, is basically a proxy of fiscal insanity in the US. Because how is she going to, I'm assuming Kamala wins because she's my girl. And, but okay, even if Trump wins, I mean, income tax cuts for the rich, corporate tax cuts for the rich, what's that going to do with the deficit? It doesn't really take a lot of brains to figure out that. I don't have to be George Soros to figure out that the bond market, we are seeing the mother of all bond market bloodbaths staring at us in the face.
And I'm afraid on that note, we have to finish. Thank you very, very much for my esteemed colleagues, panelists, to joining me, and thank you for listening.
Thank you.